Bitcoin has seen a strong breakdown of the horizontal support at 60k as well as the bull market uptrend. Will the price sustain under these levels for the upcoming weekly candle close and thus ending the bull market, or are the bulls going to reclaim control and push the price back upwards? These are questions we're answering in today's video. Let's jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at Bitcoin's price action as we have just seen a daily close under the bull market uptrend and a massive correction from that $60,000 support. The big question is, how far will Bitcoin go down, or will we see a reversal? We're going to be taking a look at the short-term and the macro charts, the total cryptocurrency market cap, and even Bitcoin dominance to answer these questions. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, trading chart and education chat, help, daily video, news, and trade setup chat. If that is what you're interested in, contact us on Telegram by clicking the pinned comment in the free channel by clicking my name or these links for more information. Without further ado, let's dive on in. So as we can see, we just had that daily candle close underneath the bull market uptrend and underneath the 200 SMA for the first time since the bull run for Bitcoin started in October 2023. This is a horrible sign for Bitcoin, and actually it was probably the most bearish thing we've actually seen on a chart for a very long time, which is something we'll be discussing in today's video in a later part when we get to our macro analysis. Moving over to the short-term price action, we can see we have seen that correction underneath that 60k low, resulting in that move towards our sell-side liquidity. We discussed this as a possibility in our prior video. We said that a breakdown of that $60,000 region, we're looking for a first target around that 56.6k region, which we have now reached. For us to see an extended correction, we are going to have to drop below our sell side liquidity, as that is where we enter that low historical resistance range based on our VRPV. We'll discuss this in just a moment. But moving over to our market data, to take a look at the brutality over the last 24 hours. 24-hour volume is up 39% at 181 billion. 24-hour liquidations are up a massive 142% at a huge amount of 105 million. 441 million of those liquidations actually coming from long positions and 64 million coming from short positions. If we take a look at the total 24-hour liquidations over here, 177 million of the 505 million in liquidations have come from Bitcoin, 100 million from Ethereum. Therefore, we can see around 250 million in liquidations have come from altcoins. Altcoins getting utterly brutalized yet again. Moving over to the DXY, the DXY continues downwards. The overall trajectory of the DXY, the dollar, is dropping. And we talked about the correlation between the US dollar, traditional assets such as the S&P 500 and Bitcoin in our prior video, and we talked about why at the moment we are seeing massive deviations for cryptocurrency in regards to what you would generally be expecting when it comes to stock crypto correlation, which is around 70% positive correlation. And why that is the case. Again, external industry specific factors such as the Mt. Gox, such as the German government, such as undisclosed information to the public, potentially pushing cryptocurrency down. As when we look at all of the main drivers of price action that move these risk asset markets up, generally we have green signs, we have ticks, we have bullish indications, besides one which is going to be our societal perspective. Societal perspective is at all-time lows right now for cryptocurrency. And as we know, for asset markets to rise, we do need a degree of emotion, we do need a degree of euphoria to actually push those prices upwards. So that is a big one. Societal perspective is at all-time lows. When we look through interest rates in regards to click rates on YouTube, when we look through click rates on Google overall search trends, they are at all-time lows right now, literally bear market lows. But there is a lot more going behind the scenes right now in regards to why cryptocurrency is essentially deviating so aggressively from the stock market. If we do take a look at the S&P 500 here and we overlay something like a Bitcoin chart, and then we zoom into maybe a daily chart, we can see just how much in the last 2 weeks or 3 weeks, we've actually really deviated away from the trend. If we look historically for Bitcoin, if we zoom out, we've had a few instances historically where Bitcoin really deviates away from the trajectory of the S&P 500. Notably, we had the FTX correction. That was a really big one. That was again over here. You can see the correction for Bitcoin as the S&P 500 went upwards. We also had another notable event, which was over here when we saw the S&P 500 go down and Bitcoin go upwards. That, of course, was going to be our ETF news. That was when the ETF hype really came into. So both of these events in the last, 5 years of, almost perfect correlation, both of the times of which we saw deviation from the correlation, which is 70%, we saw major notable industry-specific news events. Again, the FTX correction, and again, the ETF hype. So when we look at the current price action, we can see Bitcoin has massively deviated away from what would be expected for risk asset markets based on interest rate data, based on inflation data, and even based on how we would assume these markets to move at this particular phase. Even if we go ahead and match up the horizontal consolidation we have seen for Bitcoin with that of the S&P 500, we saw a direct break upwards of that horizontal consolidation where we saw a direct breakdown for Bitcoin. Again, this is telling us there is industry-specific news that is either public or not public that is pushing cryptocurrency down, because the data we have that would suggest asset markets to rise are suggesting asset markets to rise. We know that because the S&P 500 is continuing upwards and they are strongly positively correlated. So again, we talked about that in yesterday. There may be news events in the pipeline that we just don't know about as the public yet. It might be the Mt. Gox news, it might be the German selling news, but I would like to go ahead and remind you the deviation for Bitcoin initiated right over here. When was that? That was the start of June. And guess what that was? That was the NFP data. We had NFP data come out bearish. We saw Bitcoin massively correct. We saw positive CPI data. We saw Bitcoin massively correct. We saw positive PPI data. We saw Bitcoin massively correct. So this entire time, since that June point, since that point of deviation, we've been seeing massive deviation across the board for Bitcoin and cryptocurrency as a whole. The price action has been acting irrationally. So that is it for the broader market updates. Let's go ahead and jump into Bitcoin now. A quick word from today's video sponsor before we do. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck into it. I thought I might start on some of the easier charts today to explain the total 3 and total 2 market caps, and then jump over to Bitcoin. So let's start on the total 3, which is the altcoin market cap and Bitcoin dominance. As we can see in the last 24 hours, anytime there's any real degree of fear in the market, we generally see Bitcoin dominance rise. And that is because altcoins, they are speculative investments, right? They are speculative investments, they are emotional investments, and anytime there's any degree of uncertainty or fear, we see money flow out of altcoins, which are considered more risky, and into, or just out of the market in general, Bitcoin, which is a more stable or considered safer asset. So we have seen Bitcoin dominance rise, or Bitcoin dominance rising, and the total cryptocurrency market cap decreasing. That is a really bad sign for altcoins. We generally see altcoins bleed out significantly. And if you look at the charts over here, we can see we actually broke through the Gaussian channel midline a few days ago. And like we said, if we break below the Gaussian channel midline, there is a possibility we see a break through the Gaussian channel to the other side. And again, our lowest target for the total 3 is going to be that 460 billion mark. If the total 3 does not sustain this level, this is death for altcoins. Literally below here is death for altcoins. They're basically dead under this level, okay? If we look at our trend lines over here, we can see we've had falling momentum this entire time, represented by the RSI. The RSI is now pushing into deviation ranges. The deviation ranges being the low pivots, okay, of the bear market bottom. So momentum is essentially at bear market bottoms right now for altcoins. If we do see a break above this downtrend, we will be flipping bullish again for altcoins. If we clear this continuation high, we will see strong rallies for altcoins. Until then, we are going to be in this deep pit of despair for altcoins, essentially. A danger zone, if you must, a zone of which you should be very, very cautious. So again, if altcoins are able to break through these trigger points, as I've been saying, they will very much flip bullish again. If altcoins are able to clear those high points, we are going to see strong continuations. But for now, they are looking very, very grim, and the downside risk is very much still apparent. Moving over to the total not looking fantastic over here. If we zoom into a smaller time frame, we can see on the total that we are now retesting, similar to Bitcoin, that sell side liquidity. In fact, we are seeing a little bit of a change of structure over here on the daily chart, breaking just below that sell side liquidity level, which is not a good sign. It's a sign of potential downward continuation. This is going to be essentially the last line of support. If we fail to sustain this level, we could see initial corrections just sub of 2 trillion to around 1.93 to 1.8 trillion. That is going to be the next target if we do not sustain above this level on the daily. If our current daily candle is breaking below, we would like to see this daily candle close above. That could result in a continuation back upwards. But if we do close below this level, we are going to see a breakdown into that lower range. Again, that percentage-wise is potentially another 7% for the total market cap, which could be around 10% for altcoins, if not a little bit more. So that is the downside risk right now. Very apparent, very real. Pay attention to that. Overall, on the higher time frame, we can see the total has now broken below a very significant level, which is going to be that yearly level of resistance. This yearly prior level, we have broken below it. But again, for us to validate the breakdown, we need to close a weekly candle underneath. We are currently on that weekly candle. So the total has 3 days to literally see a god green candle. Otherwise, we are in very, very bad position to see that continuation to that 50 EMA and that horizontal support level. Let's move over to Bitcoin now and discuss the short-term chart. So Bitcoin, much like the total 3, is in a very, very similar position. We are coming down to retest that sell side liquidity level from April, May, or was it May? I think it was actually 1st of May 2024, that sell side liquidity level. The exact price point is around $56,526. This is a critical short-term level of support. Again, this was going to be the first target upon the breakdown of our support level. We saw the breakdown, we saw continuation, we are now retesting this level. The absolute best case scenario for this, if I go ahead and bring up a chart in my group chat, it summarizes this one pretty well over here. The absolute best case scenario for this, as we depicted in the group chat, would be something like this. We come down, we break the 60,000 region, we retest that sell side liquidity, and that is where we bounce from. That is the last level of support, essentially the last level of hope for Bitcoin before we start to see that extended correction into the lower $50,000 region. We can see on the right-hand side, we have that VRP, the gap right over here. Therefore, a loss of that sell side liquidity is the trigger point for the price action to see similar volatility of which we saw on the way down over here. This prior red candle, we saw a VRPB gap fill toward the downside to our sell side liquidity, and we have a larger gap underneath our sell side liquidity to 53 to 52,000. Again, that gap would likely be filled if we drop below this level. So the bearish case scenario for Bitcoin is very apparent. It is very possible now, and that lower targets are very much should be considered. However, you have to trade this now level by level. We do not expect corrections lower until sell side is lost. If sell side is lost, we expect corrections into this region. So let's now go ahead and talk about, what the bulls would need to do to reclaim, starting on the higher time frame. Number one, the most important thing the bulls will have to do to reclaim this level is, of course, to get that weekly candle above our bull market uptrend and get that weekly candle above a minimum price of 60,000. Minimum. We would want to see ideally above 61,000. However, a minimum price of 60,000 would be required. Otherwise, the trend, the horizontal support has officially broken. Okay, so that is what we're looking for. If the bulls want to reclaim, they had 3 days to do so. 3 days to push the price action upwards above 60,000. Until that happens, we are at a massive risk of seeing continuations lower. That is a very, very bad sign. In fact, that's really the only thing I could see the bulls really needing to do to flip the sentiment of this chart back bullish. Looking at the short-term charts again, if we do want to see, range higher retests and continuations, and if we go back to the S&P 500, like I said, we can really see just in that similar horizontal range. We've had that similar horizontal consolidation for S&P 500 as we have for Bitcoin. For us to see that follow through of the S&P 500, we're going to have to see Bitcoin massively outperform traditional asset markets moving forward. If we see the S&P 500 come downwards over here, that could push Bitcoin all the way down to these lower levels, which will be absolutely horrible stuff over there. So we do need to see Bitcoin, pull out like a Hail Mary almost to get back in the game and catch back up to the S&P, because it has been absolutely hammered if we're looking at these charts. So again, moving back to this chart, guys, for us to see those continuations upwards, like we said in our prior videos, the key level to break above is going to be 63.4K. We need to break above this resistance point we had in the past. We need to get above that resistance to see that continuation. While we remain under here, we are going to be looking pretty grim as well. So that is it for Bitcoin, guys. That is it for the larger time frame. Let's move over to our macro chart really quickly and then wrap up the video. So macro chart, there's a massive warning sign we are seeing again, which is going to be the breakdown of the pi cycle low on the weekly. Again, we saw altcoins do that a little bit ago on the weekly. We are now seeing Bitcoin follow suit. So it could be the case that Bitcoin is actually lagging to altcoins. Altcoins are leading the market. If we do take a look at that weekly RSI, we have seen that breakdown on the weekly. Again, a very worrisome sign. That is, of course, representative of a overall high time frame momentum shift, and we could see downward corrections as follows: 248 to 49, 42, 48 to 40 or to 52,000, 48 to 52,000, which would match up with this lower area of support if we were to see the break of the sell side liquidity. So that's it for today's video, guys. Thank you for tuning in. Have a fantastic day. We'll catch you in tomorrow. See you then.